Welcome to the EQAI Morning Briefing for August 8th, where we dive into the latest headlines shaping the financial landscape and consumer sentiment. Today, we start with a concerning trend among retail investors. According to the latest survey from the American Association of Individual Investors, sentiment has reached its lowest point in 9 months. This pessimism highlights growing uncertainties in the market, leaving many investors on edge. In the streaming world, a significant shift is underway. Disney has announced plans to crack down on shared accounts for Disney+, Hulu, and ESPN+, starting in September. This move is likely to affect millions of users who have been sharing passwords as companies look to boost revenue and enforce stricter policies. Meanwhile, in Japan, the Bank of Japan is contemplating its future policy path. A summary from their latest meeting reveals discussions about potential rate hikes if the economy continues on its projected course. It's a delicate balance for them as they navigate global economic pressures. In health news, Novartis has received accelerated approval from the FDA for a treatment aimed at reducing protein levels in the urine of adults with a rare kidney disease. This is a significant milestone that could improve the lives of many patients. Switching gears, let's talk about Monster Beverage Corp. Their stock took a hit after management cited a shift in consumer behavior, leading to disappointing profits and sales. The energy drink market is evolving, and convenience stores may not be the go-to option anymore. In the housing sector, Zillow has announced Jeremy Wacksman as its new CEO following the departure of co-founder Rich Barton. The company is narrowing its losses, but the real estate market remains challenging. Now let's turn to the stock market. CNBC's Jim Cramer has been analyzing Disney's recent post-earnings stock movements and the broader Wall Street dynamics. He emphasizes that while investors are clamoring for rate cuts, there's a palpable concern over consumer spending patterns. CVS is also in the spotlight as CEO Karen Lynch takes direct ownership of the Aetna insurance business, admitting challenges in that segment. The healthcare landscape is constantly evolving, and CVS is working to address these issues head-on. On the technology front, Intel's stock has seen a dramatic decline of 38% in just a week, as analysts downgrade their outlook amidst ongoing investor skepticism. This has caused ripples throughout the tech sector. In a surprising twist, a man turned a $9 investment in a domain name linked to a political campaign into a $15,000 sale. This highlights how foresight and timing can pay off big in the digital age. As we look at the broader economic picture, Jamie Dimon of JPMorgan Chase has reiterated his belief that a recession is still a possibility on the horizon. His insights remind us to stay vigilant as we navigate these turbulent waters. Meanwhile, Bumble is facing its own challenges, with stocks dropping nearly 30% after the company forecasted tougher times ahead. The dating app landscape is shifting, and consumer engagement seems to be waning. In the financial aid sector, the FAFSA form will open later than usual this year, with a target date of December 1st. This delay aims to prevent glitches and streamline the application process for students seeking financial help for college. We can't overlook the ongoing demand for pumpkin spice lattes, which are hitting shelves even in July. Some companies are beating Starbucks to the punch, showcasing the ever-evolving trends in consumer preferences. Costco reported a notable sales increase in July, highlighting the strength of the wholesale retailer amidst a mixed economic environment. This resilience is a promising sign for the retail sector. As we wrap up today's briefing, remember that the market has been volatile and investors are advised to exercise caution. The economic landscape is complex, with signs of both recovery and recession looming. Thank you for tuning in to the EQAI Morning Briefing. Stay informed and prepared as we continue to explore the ever-changing world of finance and investment.